Good morning. Are you trying to pay off your mortgage early? Well, are you tracking your payments? You need to track your payments so that you have something to motivate yourself. I would suggest you have a spreadsheet where you list your statement. When you receive your statement, you list on your spreadsheet, you list in one column, you list your minimum pay, principal, your interest, escrow, and you total that to have your minimum mortgage. It should match what is on your statement. And by the way, when you have the choice between paper or online statement, I would suggest you go with paper statement so that you have something for your references, for your reference. So then next on your spreadsheet, have a row for escrow and escrow principal. I will show you my spreadsheet in a while. But have a spreadsheet so that you can track your payments. When you receive your statement or when you are ready to make payment online, it will help you to know the amount you are going to apply toward your principal. By having it already on your spreadsheet, you will use that to make your payment. And then you put your confirmation number right on the spreadsheet. Having a spreadsheet to track your mortgage payment will help you over time to know or to see and analyze how much you pay toward the minimal principal, the interest, and how much you pay extra toward the principal. And by the way, if your loan of your bank or the loan servicer doesn't have that option for you to put the extra principal in a line, it would be a good idea to call them each time you make a payment and let them know how much you pay toward the principal. Otherwise, they might just put in an escrow for you. And also, if your property tax went up and they increase your escrow amount or send you a bill, I would suggest you pay the balance. And sometimes when you pay it online, even though they have a specific spot for additional escrow, when you make that payment, you have to call them to let them know that you are trying to pay the balance for the prior year. Otherwise, they will just leave it in the escrow account going forward. So you have to call them to let them know that you are paying the balance. Otherwise, your mortgage minimum amount due every month will go up. The second thing you do when you are trying to pay your mortgage off is to use your amortization schedule. I would suggest you have a binder, and every sheet will be for 1 year of statements, so you can track them all. And over time you can get rid of the old ones if you want, but you can have a sheet for each one of the years. And use your amortization schedule. Every time you get the statement in the mail, you will pull down, you will try to locate where you're at in your mortgage payments. So that will help you know how much you save or have an idea how much you save in interest, and that will help you stay motivated as well. Let me show you my spreadsheet, and you can duplicate it or do something similar to track your mortgage. So as you can see here, I have the year, the months, And you can see that on the left side I have the minimum principal, the interest, the escrow. So that total to what the amount is supposed to be every month, $919.11. And I'm tracking year-to-date payment. YTD is year-to-date. So you'll have that column that will total all the months payment for you, all the payments for you. And as you can see, when your interest decreases, that will your minimum principal will be increased by the difference, but your mortgage minimum due will be the same amount unless your escrow goes up due to the increase in your property tax. And at the bottom in the yellow, the highlighted in yellow is the additional principal. The green is the minimum principal, and year to date is $3,860 that we pay. In the 919, you can see that the minimum principal is lower than the interest, but by paying more than the minimum mortgage, we were able to raise the minimum principal to a level that is higher than the interest. But then in the yellow, the row highlighted in yellow, additional principal, the total is $33,669.38. That's what we pay in addition toward the principal. If we are just paying the minimum, then we will have paid $3,800 this year. But by paying way more than that, we are able to pay $33,000 more. And you can see that at the end of each row, I will record the confirmation number. And in November, we had to mail in an additional escrow because our property tax went up. And guess what? They didn't even apply toward the balance. They increased our minimum mortgage, which will go up anyway, because when the property tax goes up, the escrow will go up a little bit, and that will raise the minimum mortgage as well. But they'll give you the chance to pay that balance. Otherwise, the balance will be divided in 12 and apply toward the mortgage. So we pay in that balance $162.17, but they didn't apply toward the balance. And when I saw the statement, I called them and they adjusted. So that's the spreadsheet, and that will help you to track your payments. If you have not done it in the past and you wanted to do it, you can pull your mortgage statement that you get at the end of the year for your taxes to locate the principal amount paid, the interest, and you just record those and go from there. The second thing you'll use is your amortization schedule. As you can see here, our loan amount was $117,239, and the interest is 4.25%. So when you get the statement, let me show you the statement first. So when you get the statement, as you can see, our outstanding principal is $52,000, and we purchased, probably here you might see it here, we purchased the property in 2014. And as you can see, the first payment, October 1st, 2014. So by having this statement here for December 2nd statement, the total is $52,000. I don't even know if I'm pulling the right statement or if we have, yes, that's the right statement. That's the last one, because if I go up a little bit, you'll see when it's due. Because the property tax went up, our mortgage minimum went up, and that's something you should expect, that your mortgage will be going up throughout the payments because of your property tax. So when you get the statement, you will use that to record your principal on the spreadsheet. 391.59, if I can open my spreadsheet here, will go on the row of minimal principal amount, and then interest 185 will go on the row of interest for the month you are going to pay, and escrow will go 354.80 will go on the row of escrow as well for the months you are going to pay, and the total at the bottom should be 931.55. And as you can see, for December our total was 931.55, but you need to keep in mind that the row that is in green and the row below it, those two will change because the interest will decrease, your minimum principal will increase, and then you add your additional principal that you wanted to pay toward that. So you need to pay your mortgage off early. When you get the statement, you'll use the amortization schedule and you locate the balance, and you'll go down. Let's get the statement again. The statement stated that our outstanding balance is 52,280.75. So 52,280. We'll go to the balance section to locate 52,000. And as you can see, 52,280 will be somewhere here. 52,280 will be between those two. Let me see if I can make a mark here. So we are somewhere between those two. And as you move down the row, you can put the date of the next statement. So that means we are going to make a payment between 250 and 251. So those are the payment number. And guess the year. So because we are paying more than the minimum, we are going to make a payment that we will have made, if we are paying the minimum mortgage, we will have made in 2035. August, between July and August 2035. That's when that payment, our next payment belong to. But because we are paying extra, not just the minimum, we are making that payment way ahead of time in 2019. So that's one. Second, one way you can analyze your amortization schedule is you look at the prior month when you pay the balance, the outstanding balance that you have. And as you can see, before we make our payment in December, we are on payment number 244, 245. And that was somewhere between, let me see if I can locate it here. I believe that was somewhere between 54 and 54 and 55. I can use this one. It can be very hard to, let's see, to find the appropriate row. So that would be a row right below where I put the mark. So before we made the payment in December, we are between 54,783 and 54,400. And if I can locate that statement, you will see is 54,510. Now you'll see that by making the payment and receiving the next statement, we jump from 244 payment number to 250. So by skipping those numbers here, that means we save on interest that we will have paid if we are paying the minimum mortgage due. And you'll see your interest in the row here. Just give you an idea. So you don't have to use your calculator to calculate it, but you can just see that if we are paying the minimum, you will have paid those interests as well. But by paying more than that, we are not going to pay the interest listed in this section. That's how we are saving by paying more than the minimum mortgage. So you need to come up with a plan that will help you pay your mortgage early. And using the amortization schedule will help you to have an idea how much you are saving. And if you are able, in our case, we apply one income toward the mortgage and it helps, but you just have to do what you can. But each time you pay more than the minimum, you are saving on an interest. Otherwise, you will be paying more in interest than is needed. Thank you for watching. I'm Nina from Nina Soap.